Ask an accounting instructor at college about the importance of accounting to a small business owner, and you'll likely get a response like this. Owner-managers of small businesses need timely and accurate financial reporting so they can use the information to manage their businesses.
In the late 1980s, I said the same thing as a newly minted CGA at Camerson College, teaching introductory and cost accounting courses in Victoria, British Columbia. That was, after all, what the required textbooks said, and still say to this day.
But public accountants know this is nonsense for a whole lot of reasons. First, owner-managers simply don't have accurate financial statements, except a couple of months after the year end when their public accountant has finished working his or her magic. Second, the statements aren't timely enough to be very useful. So if they're smart, they look for proxies to let them know their financial situation in a hurry. Finally, because of this, owner-managers in our smallest businesses are usually transaction-focused anyway. They use their financial statements primarily for filing tax returns.
If you asked a small business owner what their needs were, they would probably say they needed good bookkeeping so their public accountant could prepare the financial statements and file their taxes. If you asked their public accountant, he or she would probably agree. The accountant's expectation was a little more nuanced, though. They typically would hope for an accurate set of cash-basis records that could readily be converted to an accrual basis with a few straightforward adjusting journal entries. Then they would do the best that they could in the way of after-the-fact tax planning before filing the tax return. They understood that double-entry bookkeeping was counterintuitive and beyond the capabilities of staff at most small businesses. Today, this would include staff at most small bookkeeping firms that pay for certifications in one accounting package or another.
The gold standard for an accounting system is something simple, accurate, and cost-effective that allows accurate financial statements to be generated at the press of a button, or at least at the click of a mouse. Today's online accounting software publishers would like small businesses to believe their software will guarantee that result. Many even offer short YouTube videos that will teach anyone how to do their own accounting painlessly. Almost 4 decades after Sage Accounting's first ancestors appeared on the market in 1985, small Canadian businesses are still struggling with the results of design missteps by systems engineers at today's most popular publishers of online accounting software. Today's systems are undeniably better than their predecessors. All of us have benefited from massive improvements in information technology. The enormous reach of the internet and the resulting migration of data and applications to the cloud has transformed much of what we do. But the accounting system's design challenges are really human, not technological. We believe developers missed the essential first step in the system's design process. According to ChatGPT, the essential first step in any systems design process is typically defining the problem or understanding the requirements. This involves gathering information about the system's purpose, functionality, constraints, stakeholders, and desired outcomes. Without a clear understanding of what needs to be achieved, it's difficult to proceed with designing an effective solution. This step sets the foundation for the entire design process, guiding subsequent decisions and actions. The reality is that, even though these packages are relatively good, accounting software alone won't make you an accountant, any more than word processing software will make you a writer.
So let's look again at the essential first step in the systems design process, commonly called the needs analysis. So whose needs are we referring to? The stakeholders, or users, are the small businesses themselves, and the public accountants that take their accounting records and use them to compile financial statements and tax returns.
Just 4 decades ago, public accountants were invariably the de facto systems designers for our small business clients. We used to design 1 or 2 special-purpose journals to meet the specific requirements of different clients. This would usually include a cash receipts and disbursements journal, and perhaps a customized sales journal or payroll journal. It's clear that 4 decades ago, public accountants had a better understanding of that essential first step in the systems design process than developers and designers at accounting software companies do today. In this short series of videos, we'll go over some of the key concepts required to design effective accounting systems for our smallest clients. But first, let's consider how small Canada's small businesses are. There are approximately 1.19 million small employer businesses in Canada. These make up 97.9% of all Canada's employer businesses. On average, they employ just 5.6 employees each. That does not include about 1.9 million self-employed individuals without paid staff. When we consider these statistics, it is pretty clear that instructors at business schools are mostly out of touch when it comes to the reality faced by the vast majority of Canada's businesses and the 30,000 or so small accounting firms that serve them.
Obviously, before the widespread adoption of the personal computer and the emergence of the internet, we somehow managed to process sales transactions and purchases, record them in journals, and then compiled these to produce financial statements. The precursors of the accounting software systems used today by more than 70% of Canada's small businesses were invariably paper-based. Much of the work in the past involved transcribing paper documents from a source document or receipt to an intermediate paper journal. This was then posted to an accounting ledger. Today's personal computers make this much faster and more efficient, whether you use commercial spreadsheets or commercial accounting software. Today, users can download the equivalent of a cash receipts and disbursements journal directly from their online banking application. It has the potential for much greater efficiency, but only if you know what you're doing. Inexperienced bookkeepers can quickly compile large numbers of incorrectly categorized transactions, making the job of the public accountant more difficult, not less. The fundamental accounting algorithm is a little counterintuitive. In fact, some economic historians believe that double-entry accounting, with its confusing use of debits and credits, may have developed as a response to Muslim and Christian prohibitions against the charging of interest in the early medieval period. Although as an accountant I find the double-entry method quite logical, the arguments of the economic historians are almost as confusing as the reasons for religious prohibitions against the charging of interest. Whatever the truth, non-accountants are generally best using simple single-entry systems. Presumably, that is why public accountants developed simple, special-purpose journals. When I first was learning my trade in the 1980s, most of our clients used one or more special-purpose journals like the cash receipts and disbursements or sales journals. We then compiled or summarized these journals and posted the totals to a working trial balance. These worked because the second part of the entry could easily be inferred from the other part of the entry. We then recorded more complex entries in the free-form general journal, then posted these to the same working trial balance as well before drafting financial statements. While the expectation of accounting software publishers is that public accountants would primarily use accounting software for their working paper files, my experience is that most of our work is done in a working paper package. Once the financials are completed, we may then post the adjustments to the online accounting package to align with our working trial balance and the company's tax filings. In my experience, unless the company is using their accounting system for invoicing, collections, and the maintenance of an accounts receivable system, it may be of very little value to the business or to us. This is particularly true of very small companies with inexperienced bookkeepers. In today's world, when money changes hands, it finds its way into or out of a bank. With online banking, for all intents and purposes, a record of the transaction is created automatically by the bank. This is the essence of an accounting journal, which is maintained by the bank. But this technology is really very new. None of the technologies that we rely on today for accounting existed, or at least weren't widely available, until the first popular commercial spreadsheet, Lotus 123, was introduced in 1982. Retailers only began processing credit cards using touchscreen point-of-sale systems in about 1986. Until the early 1990s, public accountants prepared their working paper files on columnar paper, arranged in manila file folders, and stored them in filing cabinets. The most popular working paper software, Caseware, was developed in Toronto and was based on the manual systems it was designed to replace. Neither online banking nor online accounting were commonly available until about the year 2000. For most of us, it's hard to imagine a world without e-transfers and the ability to buy stuff online. Today, more than 55% of Canada's businesses use QuickBooks Online. Yet somehow before that people bought and sold stuff and figured out how much tax they owed. As we said earlier, the overwhelming majority of Canada's businesses are exceedingly small, only averaging about 3 staff members, if you include the self-employed. Neither our business schools nor our accounting software designers pay enough attention to these very small businesses. As a result, small public accounting firms are forced to deal with accounting records that are not fit for purpose. This series of videos is meant to highlight better tools and design practices for our small accounting firms and their small business clients. We believe that it's important to keep sight of the real needs of users and to better adapt accounting practices to the improvements in technology.